Bob, why are we shorter than we were back in January, February of this year?
Well, it's interesting, Alex, and good morning. The fundamentals really point to a short position, but I think we do have to work some of those shorts out of the market. It's very difficult when you run out of sellers in a market that is so full of speculation as crude oil is. But when you look at the fundamentals, even with the rising rig counts, you're still seeing domestic production at very low levels. This is the first week since March that domestic production didn't actually fall, but the EIA is expecting it to fall further. So even with the rising rig counts, with CapEx so depressed and the U.S. being the marginal producer, it's tough to see really oil rallying anytime, anywhere above $50 in the next 6 months or so.
We did, of course, the headline today that OPEC will be meeting on the sidelines of an international energy forum next month. It's an informal meeting. Of course, it's kind of reignited potential freeze talks in the market. Does that justify the pop that we've seen today?
You know, OPEC reminds me of the Fed about 3 or 4 years ago when they still had the ability to sort of talk the market in a direction. I really think that's what this is. I don't think there's going to be any production floor. OPEC is pumping and drilling full out. They don't have a lot of marginal process left. They don't have a lot of marginal crude oil left anywhere other than Iran. So I think you're going to see talks. I think they're going to have the talks. But that's really about keeping oil in this new range. And the U.S. isn't going to really ramp up this year unless we get sustained price action above 50, which I don't think we'll see.
Talk, but talk is cheap, right? All right, so give me the range. You don't see oil over 50. What's the range?
Well, I think we're going to go back up to 46. I think 44 in the short term and then 46. My actual numbers are more specific than that, but we can just look at it as 44 to 46. And then oil's going to grind sideways. I think the new range is somewhere between $40 and $48. You will see dips below 40. You'll see pops above 48 into that 50 range. But I think as we get out of the summer driving season, which we're in the peak of now, and refineries enter turnaround for winter blend, I think you're going to see those stockpiles build, and then probably sometime in the next 6 months, I'll move back down toward 30.
Oh, wow. Okay, pretty bearish.